YouTube, what's good? Welcome back to the Coinist Podcast. Have another episode for you today, and this one's pretty good. I have on a good friend of mine. We go way back, Crypto Cred. You probably already follow him on Twitter, one of the sharpest, most respected, most followed traders, analysts in the crypto space. His info is right down below. Follow them on YouTube if you're not already. Also follow them on Twitter. I imagine you already are. We cover the Bitcoin outlook. Things are wild right now. What does his chart say? We also look at ETH's rise and trading that and trading DeFi and trading competitions. We cover a lot of ground. So I think you guys are going to dig this one. We break down some charts as well. So if you're digging these, hit like and subscribe, help grow the channel. And like I said, follow them if you aren't already. Also check out the show sponsors down below. They help make this possible. So with that out of the way, I hope you guys enjoy the episode. Let's get right to it. And we'll kick this thing off. Cred, I got my charts up. Shit's pretty wild, man. How are you? How is life over there? What the hell's going on in your world?
Hi, Luke. Well, thanks for having me. First of all, yeah. I mean, when volatility is absent, everyone kind of just wants it to turn up. And then once it does, it almost takes a week to kick into gear, sleep and just maybe adding even new levels we didn't think were reasonable a week ago. It's been good, man. I wasn't short this rally, which I think is a good start looking at the liquidation numbers coming in during the course of this. But I'm just kind of looking into the monthly, weekly close, seeing where the proverbial dust settles. I don't think we can talk about the pullback. This thing hasn't pulled back at all yet. And no guarantees that it will either. But yeah, I'm just trying to kick into gear. I've already missed a couple of trades that maybe I shouldn't have. So it's kind of very much work mode and capture as much of this as possible for me, mate. How about you?
Yeah, we've very quickly switched from, I think in crypto you spend 90% of your time there's weeks you make money, there's weeks you lose money, but usually you're pissed at the weeks you lost money. We very quickly switched to a time where it's like, oh fuck, I missed that trade. I should have made more money. Like that's the doubt I have now. That's the concern I have now when I wake up in the morning is, fuck, what did I miss? I should have been in that one pumped. So, it's nice to be back in that period. I also, right before we started this, I was scrolling down my Twitter timeline and someone said, the top fund managers I know, they haven't showered in 24 hours. And I read that and I said, fuck, I haven't showered in 24 hours. So I just hopped out of the shower, Glad we got to sit down and record. I just asked the crowd on Twitter what we should talk about. And I don't know why I asked that, thinking we were going to get good suggestions, because it was 100% trolls.
Well deserved, right? I mean, you kind of get from the universe what you put into the universe. I mean, that bit is fair.
Yeah, we invited that. We'll probably start then just looking at the charts, because we'll do the suggestions later. If you're listening, if you suggested something, you wanted us to talk about it, I promise I'll try to get to your question towards the end. We're probably going to look at Bitcoin, though, because, I look at this, admittedly, earlier this year when people said DeFi is going to be this narrative that pumps the market, or, retail is actually going to come next time we're at 10K. I'm incredibly bullish. Don't get me wrong on Bitcoin long term. I also think we're going to pass 20K at some point. I did not think it would happen this fast. And especially this week when we hit 10K, I was like, I don't think we're just going to launch to 11.5. How do you view this, this parabolic move? I mean, it's parabolic now. How do you view this parabolic move in Bitcoin?
No, straight up. I mean, I'm not entirely convinced, or I hadn't seen great arguments for this being like an influx of new money or the kind of retail money that we were used to in kind of 2017.
Yeah.
For me, from the available evidence, or at least my understanding, and again, I'm a chart guy, so this is much more reaching than my usual stuff, but this is more of a case of reallocation of capital into this kind of Ethereum-focused ecosystem, rather than new money coming in and just buying up this narrative from like a retail level in most discussions we have. So, I mean, that's just kind of the narrative side. On the technical side, I mean, yeah, as the famous cliche goes, consolidation precedes expansion, right? All this low volatility periods leads to high volatility periods. Whatever sagely wisdom is your cup of tea. I think the more useful point to make is that as a technical guy, Bitcoin has a crazy habit of basically overextending through levels that people think would be reasonable, right? You kind of have a level of resistance, a bit above market, a level of support a bit below market, and you think this is your range, or even if it breaks out, this is kind of a big level. And then in very Bitcoin-esque fashion, it'll just eat it up, right? In just a big old liquidation candle. And you have to basically recalibrate on the fly, because what you thought was going to be your range or your turning point, whatever, that shit just gets eaten up. So that's kind of the big thing for me. I'm not a big fan of ascribing causation when it comes to markets. I think they're far too complex. I think high time frame narratives have a place.
Sure.
But if you want to have a fight about market microstructure and who moved what, where, and why, I think that's mostly futile. But in terms of high time frame kind of properties, yeah, I mean, we went nowhere for, I mean, I don't even know how long that was. Was that a month, 2 months, several weeks?
A month and a half. A month and a half. We're basically stuck. Yeah.
It just felt like absolute hell. And so it's not surprising that when there's a chance to get positioned on a break, the market did so accordingly, right? A lot of this was just kind of just momentum trading, chasing, whatever you want to call it. It's not exactly the Bund trading, break and pull back to 9.6 and then go higher, right? This is like, I'm looking at the weekly chart right now, just straight break through the range and then another candle the same size. Pretty crazy times, man.
You have do you have 11.5K as resistance? Like I have this marked way back from actually March, and this was 2018. I mean, obviously we hit it in 2019 too. It's like the highest a weekly close got. Do you have 11.5? Basically where we peaked yesterday. I think the top tick on BitMEX was 11.5 exactly. Do you have that marked as resistance? You can share your chart too.
Yeah, let me bring this up. Hopefully technology is compliant. No guarantees, of course. That should be visible.
Beautiful, yeah.
Right, so that's the weekly chart. As you can see, I have got that level off of the highest close, which comes out to what, 1147, 11.4. This is the Coinbase chart, obviously. And yeah, I mean, for me, from the weekly point of view, and I think there's a time frame that's much more interesting than this. Can you see my screenshot tool? Is that also working?
Yeah, it's all good.
Oh, fantastic. We basically traded back towards this consolidation, right? The old kind of distribution in hindsight sort of thing. Oops, that should have been the pen tool. But you know what I mean? This is basically range before we broke down, did the double top, etc., etc. I think the level's relevant on the weekly time frame, but for me, and maybe for the viewers who are kind of maybe watching this going forward, it's really the monthly time frame that's more telling than anything else. And I think the really important monthly level, using a similar type of logic, we talked about the weekly highest close at 11.4. For me, there's a monthly highest close at 10.7, and I like to take liberties when I'm dealing with high time frame levels. So it's kind of 10.7, 11K,
sure,
right? Because we know that price really doesn't mind. That's an extreme example, but generally overextending through these monthly levels. So
sure.
I leave some artistic license, if you will, for wicks. But I think the monthly close is going to be really telling. If we break and convincingly, or you can use any type of caveat you want, but continued strength through this area, which for me is kind of 10.7, you can call it the 11K handle, whatever. Maybe you can even use the 11.4 level from the weekly. That type of area is enough when dealing with high time frame levels. I think any strength through there, I mean, if you're a seller, where else do you get positioned, right? It's one way I like to look at markets, like if not here, then where? And that's usually when I get my favorite trades, because there's like a ton of space between levels for me to capitalize on, either in a level to level fashion or as a kind of continuation trade once the level's been broken. So looking at the same monthly area, right, there's the kind of 11K handle here. And if sellers don't step in at this point, the only other reasonable argument I can see them make, again, dealing with monthly, quarterly, whatever, from a high time frame point of view, is closer to 14K at this highest close where the previous kind of swing high came in. So we're at a real turning point for me. I'm not a fan of being too granular or surgical with like monthly and quarterly levels, like a few $100 above, below, and you got to give the wicks some breathing room. But yeah, it's an overused cliche that, oh, it's do or die, or like the market's at a real turning point and all these kind of hype phrases in trading. But I think in this case, you can make a really valid high time frame technical argument for this being a clear turning point, simply because of how much space is above and below this area in terms of where we can next expect high time frame support and resistance. That's kind of my high time frame view and roadmap that I'll be looking at in the coming weeks and maybe longer.
You know what? I like doing this so much and being able to have a convo and put this on video. When you see stuff on Twitter, like the do or die is a great example. Like imagine if you posted this chart and said, this is where sellers would step in. You mark up here like 13.8. You say, if it closes above here, I look to get long. If you post that on Twitter, it's misinterpreted. People retweet this and say, analyst Cred said we're moving to all-time high monthly close. Like it's just ridiculous. It's like the price targets where people are like 100K by 2021. But if you actually ask them, it's based on a narrative or it's based on these people stepping in. There's so much nuance. So much nuance gets lost on Twitter.
Sure. And I think the whole, my kind of guiding philosophy to some extent, or my framework of working from one level to the next. I made a video recently on first trouble area, which is on my channel, blah, blah, blah. And that kind of clarifies a lot of the points, because the often criticism of trading from one level to the next is that you can't swing trade, right? If you always take profit at resistance and you always take profit at support, etc., there's this straw man argument that you can't swing trade or you can't take big positions because you're always just getting out the next level. What people ignore is that logic applies per time frame. So if I'm selling like monthly or weekly resistance, the target for the trade is monthly or weekly support, right? It's not going to be an hourly level of support like $10 away from the monthly or weekly level that I'm selling. So, I mean, this kind of chart makes that point really clear. You can see that the trouble areas, or kind of the space between levels, is so vast that there is a ton of space for the kind of nuance you mentioned, and positioning in the weeks and days to come, right? Everyone wants to trade high timeframes, but there's often very little patience when it comes to those levels, which isn't how you should approach them, in my view.
I think partially that's because how quick crypto moves, how volatile it is. But I think the other thing is our addiction, as I'm gonna group you in here as an ecosystem, to leverage. And that's not saying me or you use too much leverage. I just see this unanimously across the board. You could talk about this weekly trade or a monthly trade. I'll talk about kind of, I expect majors to go up over the next quarter. I'm bullish, macro wise. It'll be 2 days later and ETH is down 5%, and you just get spammed with wrecked, destroyed, and it's like, I mean, come on, man.
Venture Coinist, and now the bailiffs are knocking at my door. They've dragged out the sofa already. Yeah,
oh, it's wild. It's like, if you were to, I can't even find an analogy of like a gamble. I can't even think of a game that moves as fast as crypto does, and how people grade it on a minute by minute scale. It's
I mean, the bizarre thing is, like, people talk about, like, the more experienced traders will talk about hedging, right? And my understanding of when the majority, or the kind of ordinary use of that term, is that they'll take like a one-time short position on inverse future and kind of lock in a value per Bitcoin that they've hedged, right? Sure. Now, how many of the people on Twitter do you think actually do that, or somewhat regularly, or have like a system for that? Maybe 2%? Like 2 to 3%, whatever number we can ask for. It's a minority, right? Now, the implication of that is that the overwhelming majority of participants you see are net long by definition, right? They own Bitcoin, whether it's cold storage, or whether it's collateral on an exchange, or whatever it may be. They're net long Bitcoin. Yet there's still such an obsession to kind of scream wrecked, or you weren't long, or you did this, that, etc. It's really bizarre, because when Bitcoin goes up, the base assumption should be that everyone has won, right? Unless they were overtly bearish or did something stupid or shorted on inverse futures, blah, blah, blah. The default assumption should be that everyone winning. Looking at Twitter, that's rarely the case when Bitcoin goes up, right? The focus tends to be on those who are wrecked, those who are wrong, etc., etc. And for me, that's just so weird and counterintuitive. I still can't get used to it.
It keeps it fun, though. I want to look at ETH, but before we do that, now I'm curious. What's your opinion on, for people that are listening and looking at sources or watching here on YouTube, where the hell do they get info? I actually think the quality, as much as shit we give it, I actually think the quality of information for traders on Twitter has gone up drastically. And if you look at just the methods that people are even approaching the market with, compared to like 2017, when basically everyone would just draw a triangle and assume that things would break out. Like, do you think it's gone up? Do you think it's actually still a useful place to get information?
Oh, absolutely. Yeah. I mean, it's almost like the internet to some extent, where if you look for trash, you'll find it, and it's easy to stumble upon. But if you're on the right part of the internet, you can find a lot of really clustered, high quality information. I think it's unequivocally and undeniably true that we're in a better spot, information, quality wise, and just everything else as traders, than we were in 2017. I don't want to be too harsh in that regard and just say, oh, well, everyone was inexperienced, now everyone's really clever, and all the smart guys came to crypto. I'm sure there's an argument to be made to that effect.
Yeah.
But perhaps more importantly, you didn't have to be super knowledgeable, nuanced, etc., to make money in 2017. Right? And I'm a strong believer in the kind of minimum effective dose. Whereas if really basic, simple stuff is working, and you have to make minimal amendments and the smallest level of complexity, if that's still getting you really good results, then you probably shouldn't mess with that until you have to, right? And I think that explains a large part of kind of 2017 trading, where, I mean, how much of a technical analysis, on-chain analytics, order flow, footprint, heat map, I don't know, expert do you have to be to make money in 2017, right? And the answer was like, not at all. you draw anything kind of in any type of support, imagined or real, and chances are if it hit that, it was going to go up like 20, 40%.
Yeah.
It was just a mental market. So there was no need to kind of be a good trader in 2017. So I think a lot of the incentives that we have now to kind of get good, research, study, etc., they simply just weren't there in 2017, and that had an effect on the kind of net quality of traders, if I can make up such a term.
No, I think that's. I'm going to keep using that term. I think it's a good one. I mean, we were. It's like Nassim Taleb says, "Fooled by randomness." I think we were just fooled by bullishness. Like everything fucking went up, man. Like you could. I mean, we're seeing it right now. There was more news about a notable fund that just closed down, and it was a fund that actually had one of the best trades from 2018. They foresaw that ETH was going to drop, and that all these, it was what they call it. Instead of the fat protocol thesis, they called it the fat I don't know what they called it, but basically they saw that all these treasuries were going to sell their ETH. They were incredibly bearish ETH, got short from $800. And then eventually after a while, shitcoins just all went down, right? The market volatility died, and that fund eventually had to close down. I imagine there's a lot of funds that have had to close down. There's a lot of individual traders that had their balances wiped, but we're all, I think the past 2 years has been a cleansing for sure, and just brought up that information for those who survived. All right, Cred, let's look at ETH.
Sure,
ETH is obviously the biggest story. I think, I try to stay away from attributing moves to and making outright claims that this is why the market moved, but I think it's valid to some degree to say it could be ETH bringing up the rest of the market, or at least the hype or the attention that ETH is bringing with this DeFi move. And ETH's been one of the biggest movers. Did you see this? You see this coming, or did it kind of catch you off guard? ETH's move.
Gosh, I mean, my technical view was that we were just like Bitcoin, right? There was a much tighter range on ETH that I talked about on kind of stream, newsletter, whatever, which was between kind of 220 and 250. And my basic idea was that if 250 breaks, just like the kind of setups that I like, there's a lot of space until the next level of resistance, which for me was like 275, if not 300, kind of just a similar, basic range breakout. Did I see the extent of this and how far this has run without any kind of material sell pressure right now? Absolutely not. And I think that's the nature of crypto. It's very hard once you get either a breakout or a trend or some sort of volatility. I've seen very few instances of that being predicted to a T. It almost always, just from observation, tends to overextend, shoot through, and just completely melt people's targets.
Yeah.
Now, that doesn't mean that price doesn't eventually come back and settle closer to those reasonable levels, but certainly when it comes to the tops, bottoms, and the kind of extremes, it tends to be way beyond what most people would think reasonable. And I think part of that is like a mindset sort of thing. Like if you're dealing with like a $20 daily candle period for like weeks, or just periods of really low volatility, you kind of skew towards lower time frames. You basically tunnel vision on that range, and I think that plays out, or that has an effect when the market does break out, because so many people are just left off base and have to recalibrate and just aren't used to the magnitude of the breakout. I certainly know that I fall privy to this quite a lot. Like I was talking about, Bitcoin 10.5, 10.7 being a reasonable area, and then it just, shoots up to 11K. I think that's a very kind of naturally crypto thing to do. So no, I'm not going to pretend that, obviously I was bullish from the lows, mate. That type of thing. Anticipated the 250 break to be volatile. We all know that kind of went in one candle, didn't get a chance to get involved in the pullback. But I think it's in a very, again, high time frame charts for high, long-lasting value. Just going to make up a term there. In a similar way, I think there are like a handful of levels that matter from a high time frame point of view. The first is this quarterly level of resistance. Again, the price level is 290, but if we're being generous and allowing liberties, we're going to say the 300 area, right? The 300 handle, whatever it may be. Mm-hmm. And then, interestingly, the only real structure above that is the old range we had before ETH broke down and made its lowest low, right? And this isn't just one big rectangle. As you can imagine, there are two levels that matter within that range. It's kind of where that range was finding support or kind of established its base, and it's where that range established resistance. And again, this is on the monthly time frame, so it looks much more rangy on lower time frames, but the boundaries are clear. So for me, ETH, any pushes into this kind of, again, I've labeled this 360 level as front run resistance, just because I think that the 400 handle is much more attractive, but I wouldn't ignore 360 as a technical trader, even if it is for short-term trading. But long story short, I think rallies into this level are technically rallies into resistance. Usually, especially if this just goes vertical and no pullbacks at all, I'd imagine that'd be a good place to de-risk. And I can make arguments for kind of the mechanics for that a bit later on. But from a macro point of view, you've got like resistance around 400, the bottom of the range, and the only other big level is at what seem like unfathomable prices to me, closer to 700, right? So the easier kind of high time frame opportunities that I'd look for, similar to Bitcoin, any break through 400, similar logic. If the sellers don't take the fight here, where are they going to take it? I mean, a lot of empty space on the high time frames for me between kind of 400 and mid 600s. So if the sellers roll over around the 400 handle or through this level, any sort of pullbacks or continuations or whatever convenient confirmation, made up technical analysis term is your fancy, we can look for that. And then over time, again, this is a monthly chart, right? So this is some real high time frame stuff.
Yeah.
I'd look for a move from the now reclaimed range low around the 400 handle into technical resistance and the opposite boundary of the range around 700, which sounds mental to say, but again, you can see that this makes it look very easy. Just draw a squiggly line, whoop-de-doop. But this is still resistance, needs to break and get accepted, and this is the monthly time frame, et cetera, et cetera. So that's the kind of first idea. If this is like a macro bullish move, like we've broken market structure on the weekly, and we're in a new cycle, I think again, I said at the beginning, I love trades with a lot of space, and this is like a perfect example of that, right? From one boundary to the next. So that's kind of the bullish case, right? What I think would be bullish confirmation, for lack of a better term. Not that that's language that I quite like using, but something to be aware of, especially coming into the monthly close, is we haven't yet closed above this kind of quarterly, whatever, monthly resistance around the 300 area.
Yeah.
And I don't think it's unreasonable that the market at least pulls back and pokes closer to that level. And it has done. It has come close on a couple of occasions, or at least shown a willingness to trade to that level. The kind of bearish scenario would obviously be if this level, the 300 handle, ends up acting as resistance after all. And whether that takes the form of straight up closing below the level, right? Or whether it's a pullback, we close above and then the pullback fails. Any type of bearishness at 300 for me is really impermissible. If this is a true high time frame shift in structure, we should just be seeing momentum north. And there's no reason for buyers not to reload or to somehow surrender at 300. So if that happens in one of the, in one way or another, be it just failure at the level, close below it, or hit resistance and whatever, any sort of weakness around that level, that would look quite rough on all time frames. And I would look for pullbacks to significantly, meaningfully lower levels. On the weekly time frame, this kind of makes it pretty clear how you can see that we broke market structure for me. Again, market structure being, I think, reasonably subjective, although Twitter seems to disagree. You had the high, you've had the lower high, and then we've had a higher high, even if no matter whether you use the candle close or the wick, right? So this candle is good. Market structure has been broken on the weekly time frame. We know that we've got like monthly, quarterly, whatever high time frame resistance here. So what the bearish case would look like, if it pulls back to this area and fails, then that's not bearish per se, but it's certainly a bad sign that this isn't bid as aggressively as it could be, right? Because this is your bread and butter break and retest. This is a high time frame level. You've got quarterlies here, weekly, etc. If this is kind of a straight up bullish continuation trade in the next quarter, etc., there's no real reason for the market to give up and roll over or pull back to this extent after making a higher high. If that fails, so if buyers lose at the breakout point, again, whether it's 270, 280, 290, kind of pick your poison with regard to structure. I don't think it really matters too much, but at that point, I would play it on a level-to-level basis. Support structure, number one, would obviously be the pre-breakout range. Generally, when price, has an impulse, consolidation, and impulse, that consolidation is a really good structure for technical bias, right? So it's kind of the range that led to the break in market structure. So we know it's technically significant. Any rallies back into it would be technically for buying, whether that's on the breakout with this sort of structure or towards the range low where it's most risk defined. Again, now we're getting into kind of nuances and preferences that don't really matter. But the bit that is important is that if the arse falls out of this pre-breakout range, and then any rallies aren't quickly reclaimed or find resistance, for me, that would be a really ugly chart, right? Because the narrative at that point would be that we've had a higher high, everyone's bullish, or market structure's bullish, the market should be going up. You've had a pullback to the most obvious level of support for aggressive continuation. that has failed. Okay, we can stomach that. But this pre-breakout range should really be acting as support for the reasons stated when describing this consolidation.
Sure.
Now, if that fails, you've then had a failed higher high with a break of support. And then I just play it level to level into 180s and 150s. Sorry, that was a bit long.
No, it's good, man. It's funny. Like I love this stuff, and my trading approach has always been level to level coming from FX. It's much different. You know, we look at this ETH chart, 394. You look at above 394, there's a vacuum. You look at the Bitcoin chart above 13K, there's nothing there. I think that's what a lot of people are used to. They look at a chart and it's like, oh, price discovery, a new all-time high. This thing's ripping. Like that's so bizarre in a lot of circumstances. So the level to level stuff, I think, is going to provide a lot of value to people watching and listening. But I also find it interesting. So not too long there at all.
It helps tame my euphoria, Luke. That's
exactly
a big thing for me. Like when I get euphoric and think this thing is about to melt, like it helps me from trade management and setting targets, like the FTA video. Sure, that's great. But being real. It's really the anti-euphoric effect that trading level to level has that I find extremely valuable. When the market is melting up, I virtually never take it for granted that resistance is going to magically vanish and everything's going to keep going up. So it's really that's kind of the core benefit, even more so than the technical stuff for me personally.
What are your thoughts now on ETH? We have the ETH case, we have the Bitcoin case, and for what it's worth, I'm actually quite bullish ETH. I mean, this is the first time on the ETH Bitcoin chart we've put in actually a higher high after putting in a higher low. There's been several times during this downtrend ever since 2018 where we do put in a high, but right after we're followed by a lower low. There's never a consecutive higher high after a higher low. It's the first time that's happened. And like you said, you know, price can close back down below before the monthly closes, or we can fail on the retest. So there's still a lot up in the air, but it does at least get me excited. What are your thoughts now? People have been looking at that and saying it's because DeFi is pumping things, or the value of these DeFi coins going to attribute to ETH. Have you been trading the DeFi coins? I know I asked you this before, and I think I already know your opinion on this. But when you look at some of this shit that's moving and pumping 3, 5, 10x, how are you playing it, if at all?
So I made this shit post, which is a great way to start a sentence. I think it was like a week ago. And I said that I basically made an analogy between DeFi and like master nodes, and then just made a joke like, oh, you know, DeFi is cool, you know, master nodes are cool as well.
They were cool though.
Mute conversation. Yeah, they were cool. But of course, the tongue-in-cheek point being made there is that not everything that seems to be ecosystem shifting, narrative breaking, etc., ends up performing that function, right? And even if you read people like Sam, you know, the CEO of FTX, he's got a really good number of threads actually, and I'm you know, we talked about having him on. I think you mentioned on Twitter how you want to talk to him about some of those threads, etc. If you even read his stuff, he's very clear, and someone who's very invested into that ecosystem, that there's a real risk of the speculative side for now basically being disproportionate to the actual progress being made from an ecosystem point of view, and not just capturing value extrinsic to crypto, but even a reallocation within the ecosystem. There's plenty of room for growth in all of that. So again, not an expert FA guy. I guess my whole level to level thing comes into play again. I don't marry any of these. I'll marry support, and then I'll get divorced at resistance, right? For lack of a better term. Have I been playing any of these? I'd love to tell you that I just followed Crypto Messiah and just bought all his calls and now I'm rich. Or, you know, the Gainsy method of just long everything on FTX type of thing. But no, my exposure, it's not been in any of these altcoins, unfortunately, but I mean, some of them have given plenty of reason to get involved, but altcoins haven't been my focus during the consolidation. And now that markets or the majors are volatile and breaking out, at least Bitcoin and ETH, I doubt that my focus is gonna shift as well. I know there are guys who play this really well, like, you know, they'll play Bitcoin, then they'll leave bids on alt BTC pairs for when Bitcoin rips, they get filled, and even those 3, 4, 5, 10% bounces, they play those and they're profitable. I think that's fantastic, but that's never something that I've really embraced, and I don't think I'm going to reinvent the wheel at this point, Luke, if I'm being honest.
No, it's fair. You know, one thing, I'm glad you brought up Sam. One reason I think he's so spot on with this, I completely agree with his threads, and for those people that haven't seen it, I probably will do a series with Sam. I appreciate you mentioning that. It's a nice little segue to that. But but the reason I think he gets it so well is because he's also a trader, and I think his ability to kind of see the risk in something that's ripping is much better than someone who kind of marries the narrative, or marries, like when he starts ripping, there is value to having levels in your chart. There is a value there, even if the only value is helping you manage that risk. Like your targets could be off every single time, but if it's helping you manage the downside risk, I think that's so valuable. And I think so many people miss that when they look at a chart and they look at TradingView, and especially the charts that are posted on TradingView, and they say this is all bullshit. It's like, well, no, like for the reason they're using it, maybe. But I think you have to see the value in being able to reduce risk, especially in a space that's so reflexive. We move up 5x and then down 90% every other year. It's like, I don't know how you can miss. Yeah. And one of the things, before we get to kind of the last segment where we're going to take some questions from Twitter, I'd be ashamed if I didn't ask this, because your English is so good and you say this so eloquently. What do you think the value of TA is? Because I've almost written essays on, I think you actually did write an essay on this, did write a blog on it. For people that are listening or watching and saying these charts are bullshit, they're not believers, that still happens. What do you think the value of technical analysis is? Because you've devoted a small chunk of your life to this, I'd like to say.
Yeah, it grows with every year. So I think my considered thoughts, which I don't think have changed, but I may need to reread the piece. As you mentioned, there's an article, Does Technical Analysis Work? That's available on Medium. And I think the main thread of the argument there is that it is largely a tool to A, define risk, and or B, to identify and position for risk-defined opportunities, right? Now, there's a disagreement as to definition and all of this sort of stuff. There are people who are really mad at my article because their focus was on the predictive nature of technical analysis, whereas mine was much more on the almost risk mitigation properties that I find more important. I ultimately don't think that it matters too much. If it helps you make money, great. If it helps you lose less money, I think there's even value in that, as you touched on moments ago, even providing that context, like where is support, where is resistance, what is a breakout, is this kind of cheap or expensive and somewhat, I don't want to use objective, but at least broadly identifiable terms, right? So I think it's a useful tool for getting people on the same page or having like a shared frame of reference for where an instrument may be trading. I don't think everyone is going to make money from technical analysis and trading purely based out of technical analysis, but I don't think it derives its use just from that, right? So I think it's a multifaceted tool, whether it's to gain context and be able to discuss an asset, objectively or with a shared frame of reference, that's valuable. If it helps you define your own risk in an asset class and some sort of exposure, that's valuable. If it helps you, mitigate risk and have a general understanding of should I be de-risking here, or am I bullish, am I bearish, or just getting some general, doesn't need to be perfect, sense of direction of an instrument or a trend or whatever else, I think it's useful in that regard as well, right? So it's almost in a cringy way. It depends how you use it. I agree with your argument or the implication completely that it gets a bad rap from people who use it wrongly or incorrectly. But my counter argument to that would be, it is simply unfair to assess the efficacy of something by looking at poor practitioners of that thing, right? So if I were to say, running or like lifting weights is really good for you, and then you were to look at me and I look like shit, but at the same time, I don't lift weights, right? Or I know nothing about lifting weights. You could come to the conclusion, well, he says that lifting weights is good for you, but he looks like shit. Therefore, lifting weights can't be good for you, because if it were, he wouldn't look like. Well, that's an absurd argument, right? You would you go look at personal trainers or bodybuilders or like competitors, whatever. You have to look at people who know what they're doing within that discipline to be able to make reasonable assessments of whether it has any value or not. And a lot of the people posting that TA to TradingView or whatever, we're really bad, but really anywhere people posting, technical analysis or the worst of technical analysis, I just don't think it's generally fair to make an assessment of something by looking at its worst practitioners. So that's my kind of little tirade there.
No, I appreciate the tirade. I could give my explanation. I think your words are just going to be better. The one thing I want to throw in there is I think it's just intuitive to understand, since there is no agreed upon way to value these things, like, looking at DeFi coins is probably the best example. the people who have been ahead of this move used to champion TVL and say total value locked up. That's how these things should be valued. Look at how many ETH are locked up. Look how many USDT are locked up. That's how many people are using this, and that should be driving valuations. That's already been flipped, and people are saying, well, the TVL should be different for automated market makers versus this project. So it's like, since there is no agreed upon way to value entirely new assets, which we can't even categorize as an asset yet, I mean, it makes sense that it's probably good to have some way to measure this, even if that measure is very rudimentary and you can say, well, this is the lowest it's ever been priced, this is the highest it's ever been priced. It gives you a rough metric of cheap versus expensive, of rich versus of value. So in that sense, it just kind of still blows my mind when people will look at it and they'll say, I'm going to make an FA prediction. I think based on hash rate, we're going to go to this price. And it's like, that seems to be a further extrapolation than I'm making by just saying it's cheap, but sure, we'll go with the FA as well.
And it's strange how with traders, it has to work like every single time for technical analysis to have any sort of not even predictive power, but use. And like they'll bring up calls, for example, from traders that were wrong, and they're like, "Well, how can TA work if you said this was going to happen and didn't? It's all baloney, rubbish, etc." And I just think that's like an unreasonably high bar to set. If it doesn't have 100% predictive power, then it doesn't work. Well, hell, if TA worked that way, like we'd all be rich, retired, and it just wouldn't exist as a concept, right? So it's a bit of I think a lot of it comes down to, as you mentioned, like setting really absurd standards for TA to meet. Whereas I think it's more, if used correctly or contextualized correctly, it's quite a humble endeavor, right? It's like, well, this makes sense to me. This pattern might happen. And I think the argument that I often use is like, if technical analysis were such a kind of surefire certain thing, do you think the experienced practitioners would be using 1, 2, or 3% of their account per trade? Like if the level of magnitude afforded by technical analysis were as high as you're claiming it is or ought to be, why do the most experienced and kind of veteran practitioners only risk 1 to 2 or whatever percent? I'm obviously generalizing here, but
sure.
As a framework on those ideas, it doesn't make any sense. They themselves, in allocating risk in that way, are very acutely aware of how imperfect it is.
Yeah, it's. Anyways, that argument can drown on just like every other argument on Twitter, but I had to get your opinion. Yeah, man. We'll also hit.
I'm biased, Luke. So why would you listen to me, right? My bio says technical trader.
I'm sure. I could be the most unbiased person in the world, but I'm on Twitter, so I'm probably biased as well. All right, Cred. I'm going to take some questions from the thread, but first, I have to bring this up. Bybit sponsors my show. I believe they're also sponsoring your guys' newsletter or the
YouTube show, yeah.
The YouTube show you put out, which I've tuned into, and everyone listening should go peep that. Link is also down below in the description. But the reason I'm bringing this up, shit is wild right now in the market. There's a lot of people looking at that TA like we just talked about. And Bybit, the timing has worked out pretty insane. I'm bringing this up because it's going to be fun to watch. Bybit is having a trading competition. I think there's 200 Bitcoins up for grabs, which is $2 million at today's market rate. It's pretty insane. And there's going to be a lot of teams entering and firing on this. And I view this now, I've been playing a lot more poker. I've been playing in some poker tournaments. And now I'm kind of like, I'm more interested in trading competitions, but I'm still kind of, I don't know. It still sets a confusing metric because, trading in a 1 to 3 month time period is very different from just trading your account and trying to manage risk. But I imagine people are going to be going pretty wild with this. How do you think a trading competition right now is going to play out with Bitcoin? I mean, people are going to be blowing up their accounts. What's the best strategy you think for the next 1 to 3 months if you're in a trading competition?
Gosh, yeah, I think they're fun, right? They're a pretty fun thing to look at, and other groups like Crypto Cartel, shout out to the homies. They've run like a lot of those. I think you and I also discussed off show how many people end up being liquidated.
Oh yeah.
By the time the competition like starts drawing to a close. That part is always fun. I think it should be viewed for what it is. It's a bit of fun. It's for entertainment. You kind of go, I think, balls deep is an appropriate phrase, and try to get up on the leaderboard with a couple of big positions. I think inherently, for me, 2 points to make. One, trading isn't like a team sport. Simply the way it is, you all have different personalities, systems, risk appetite, and all of these factors which make a trader or their edge. I assume to some extent they fly out the window because you're just trying to flex on the boys and high ROE, this type of thing, right? Which is totally fine.
It's gonna
but
happen.
The second one, slightly more somber, is that I know from like when I live traded in my Telegram for like a month. I don't know when that was, like a year ago, maybe 2 years. Time has become irrelevant. It was so stressful, man. That experience was really stressful, and I found myself taking trades that I wouldn't normally take with the kind of public scrutiny. I would win a trade, and then I'd get 10 DMs like, "Oh, dude, it's so good. I just made profit." And the other half would say, "Oh, I'm so angry. I missed out on this opportunity. I can't wait for the next one," right? For your next signal. And then God forbid you lose a trade. It's like, "Oh my God, what do I do? I've lost all my funds," or "You're really shit at this." And my performance kind of suffered as a result. I think they're a lot of fun. I might jump in and kind of punt around or take a couple of setups from like the stream, which I talk about on kind of Mondays and my own videos, etc. But I think, it's just a bit of fun, mate.
Yeah.
As for with Bitcoin right now, as you kind of alluded to, a lot of people are going to be caught off guard by kind of the relative size of the moves coming out of nowhere. Like we were dealing with like 2-3% daily candles or whatever within the range. Don't quote me on that. And then I'm looking at the 15-minute chart. I see one red candle, and I'm like, oh, let me just measure that from high to low, and it's like a 3% move. I'm like, oh my God, this used to be like our weekly range, and it just happened on like a micro pullback. This kind of thing is crazy. So yeah, I expect volatility. Hopefully it persists, regardless of direction, and a lot of liquidations for Bybit's engine.
The liquidations will be there. I mean, that's going to be there anyways. You brought up Flood's competition, Flood, who runs the cartel. And I remember they used to put on this trading comp on Twitter, and they would let anyone join. I think it ran on BitMEX. By the end, I don't know the exact number, but just rough estimate, I think there were only I would say over half of the competition it looked like got liquidated. Like that's how far people were gunning. And I'm really curious, is that the optimal approach? Because if your buy-in for the competition is like $1,000 and potentially you could win 200 Bitcoins, you have a team of all buy in at 0.1. So you put in one Bitcoin up for stake. Maybe that actually is the best approach to take ridiculous amounts of risk. And I hope that no one takes this out of context and said, Luke just said the ideal approach to trading is take,
Don't worry,
maximize your risk.
Crypto Cred too cowardly to trade in competition. So I got the headlines.
I'm sure.
Don't worry.
It'll be posted on some news outlet. But I actually am curious. That really hasn't been figured out. In poker, it has been. You change your range depending on your stack depth. There's certain levels where you have to take more risk. I'm not sure that's been worked out in trading competitions. That's going to be one fun thing to kind of watch evolve, not only with this one, but if BitMEX puts one on in the future, if people on Twitter hold one in the future, should you really just be swinging for the fences, up the leverage to 50x or not? So
that's actually a really good point. I could see an argument being made for, given the high stakes, that you see this being taken a bit more seriously, and some whatever quant algo million IQ dudes group up and run a bunch of strategies, try to win, that sort of thing. I still think some sort of the way I think a lot of these have been won is that someone knocks it out of the park with a big gambling trade, and then just sits on their hands and does nothing.
Sure.
Right? Because that ends up being really hard to catch up to, and even if their team members kind of more or less break even, you still hold a pretty good chance. But I really like the point you make. I wonder if the prize pool is going to see some more professional involvement. That's a good question.
Yeah, it has to attract some kind of shark. There's some quant teams. Yeah. Well, we'll see. It'll be fun to watch. And I just had Mike McDonald on the show last week. He runs Poker Shares. So for people listening, there's a pretty interesting partnership with them and Bybit going on where you can actually bet on teams of traders. So even if you aren't trading, you can almost bet on who you think is the top team trading. It's going to be fun to watch. That. Yeah, I had to at least get your opinion on that. Who knows? All right, let's take a couple of these questions to wrap this up. I asked Twitter, like I said, I don't know why I thought I'd get some good responses, but here we go. Here we go, man.
Still naive all these years later, right?
One of the first ones that I think is reasonable is Udi, and he said, "Why won't Cred retweet my ETH calls?" Cred, are you short ETH?
I'm not short ETH. At the moment, the reason, I'm not a common retweeter. You may have noticed that. I just like to keep the feed sort of curated with my own stuff. It also reduces counterparty risk in case something happens with that tweet or the person. So sorry, is it Udi or Udi? I don't know how to pronounce his name.
Oh,
it's
gosh,
embarrassing.
Udi. Not only. Go ahead.
I will keep an eye out for your Ethereum calls, and I know he's very proud of being kind of bearish and bullish ETH BTC and all this type of stuff. So I'm sorry, mate.
Udi, not only is he not going to retweet you, but I may have mispronounced your name. So we're both going to apologize for that. Good luck with the ETH trade.
Are we getting canceled? Is this it?
We could be. You know what? President Trump was actually on a really good interview the past week. I say really good, not because I support Trump or am against Trump, but really good because he was talking about... He was talking about Twitter, but it's funny that you said, you have to think about retweeting someone, and he actually admitted that. He said, I retweet some shit sometimes and I regret it. So it's like that is one of the things you have to think about with Twitter. Anyways, Nomad also asked about the origin of the humble guy copy pasta. And for people listening, there's a meme that goes around, and there are large groups of people. I feel bad because I kind of forget sometimes how many people follow you or me or Nomad or these random accounts on Twitter, 100,000 followers, hundreds of thousands, maybe 50,000 bots, but 100,000 somewhat real people that see the information you post. And there are memes posted that look like genuine responses, but this one is fake. Where did this one originate from?
So first of all, that was one of my favorite ones, right? It was like, oh, you used to be humble and wanted to teach, and now it's all kind of showmanship and one-upmanship unfollowed. Now, first of all, do follow Nomad if you're not already. He's a fantastic follow. I know people bag on him for being sometimes a kind of grouchy old subtweeting man persona, not unreasonably, but the man drops gems. And if you know how to kind of pass his Twitter and kind of almost read between the lines, there's a ton of really good stuff that goes into it. And especially when he comments on other people's tweets that I follow and the kind of trade slightly differently, you can really get some alpha from there. Anyway, paid Nomad promotion aside, the kind of origin of that copy pasta is actually hilarious, but I think if memory serves correctly, it's going to surprise some people because it wasn't initially sent to me. At least that's my recollection. It wasn't aimed at me. It was actually aimed at Donald when either we were kind of shit posting between each other or he was kind of tweet reply trolling Salsa Tequila, Jules or someone else. I very much remember, and I could be completely wrong, but my recollection is that it was actually aimed at Donald during one of the tweet reply shit post sessions. But because it had the whole teaching thing, whatever, I started being the victim of the slam dunk when it came to that copy pasta, especially by Hisaka, who just used it to automatically ratio me in any context. So that's the history of that, I think.
So it did start with you. Someone aimed that at you or Donald?
I think it was Donald. I'm like 80% sure it was actually at Donald, like as a direct reply to him. But then it kind of got adapted or readapted to fire at me because I think I was just the more suitable candidate.
That's awesome. God, one more question here. And this one I've been curious about as well. And it's the reason I asked you about technical analysis because I thought you'd explain it better. Someone said, why is the average English language skill so much higher for British people than American people? And I've been thinking about this because you've ratioed me maybe 10 fucking times when my grammar is wrong in a tweet. And you have this, this air about you now that you're like the grammar police, but I think it's actually fair because you speak incredibly well. So why is the average British person's language so much better? Where do we go wrong?
I wonder if that's true kind of empirically, if that stands up to scrutiny. I think we get away with a lot because it sounds kind of more authentic.
Is that
or authoritative, or it has more gravitas. You're like less likely to question someone if they're well-spoken. Because just the way, it's a question of substance versus form, right? And when you speak with a certain kind of British way, you get the big tick on the form box, and then your substance can kind of be a bit murky. But if you can sell it and it sounds good enough, then you kind of get away with it. So a lot of people, not a lot, but from time to time, you're like, oh, you sound so intelligent or you're so smart. And I'm like, that's not the case at all. I'm actually well-spoken. That does about 80% of the lifting, and then whether I'm smart or not, I mean, go ask my parents, I'm sure they'll give you a different answer. But I think it's just basically sleight of hand, Luke. It's the way you say things more so than what you actually say. And, people get lost in the flowery language and presentation and don't focus so much on the substance. As for the grammar stuff, I mean, that's a very interesting one. I actually don't think well, look, my circumstances are really weird because when I moved to England, I was like 10 years old. And I used to speak with a very thick American accent, which I learned growing up in Moscow and learning English there. Yeah. So I learned how to speak English with an American accent at an international school in Moscow, right? I only moved to the UK when I was 10. And I moved to this kind of whatever posh boys school with all these, not stuck up kids, but like, upper middle class kind of groomed, curated, those types of kids. And I would get dunked on for my English all the time, like straight up, just for how I sounded, for how I spoke. It just wasn't good. And I actually remember when I was actually 10 years old in the first year, my English teacher called my mum into the school and said, there's a really big issue. Suad can't speak English. And she was like, what? What do you mean he can't speak English? He's been learning it for the last whatever years. And he said, no, he speaks American. You should have the BBC playing all over your house, have him read some British newsletters and, this whole kind of shit. So yeah, I think the short answers for the whole grammar thing, part A, trauma from childhood. Part B, I actually found that studying Latin at school is just the biggest cheat code for being good at English grammar. Because once you learn Latin grammar and you have to focus on like all these declensions and these cases and all the different genders, masculine, feminine, neuter, like once you learn such a kind of complex language or study it academically, English becomes so easy, and its rules are like hilarious. Its exceptions are few or far between. And also the benefit of speaking Russian, it's also a really hard language. So I mean, English just ends up being a walk in the park. So I think trauma plus study is the short answer to that question. Maybe trauma, skewed towards trauma.
I'm glad you brought up sleight of hand too, because now I'm gonna bring this to Peter. Those weren't my words; those were yours. I think that's why he has more downloads. It just sounds cooler. I'm serious. I'm bringing that to Peter. I'm showing him the evidence.
Do it. There's a good argument to be made there.
Also, joking aside, I mean, you talk about where you went to school, your background, a lot of different countries. There's a lot of people convinced you could be a Russian spy, and I've met you. I think we had dinner in Dubai, we had dinner in London. Each time you kind of know the best spot. I also have some questions there. I'm not going to ask them publicly. I don't want to, get involved with the KGB. So we're going to avoid that. Cred, I appreciate you coming on today, man. This is fun.
Thank God. Thanks for having me, man. It's always fun. We go back a while, mate.
We do. It's time is a flat circle here in crypto, but it's wild, man. We've been doing this for a while. It seems, hopefully, once the travel restrictions and everything are up, we can meet in some other city, get dinner. It'd be good, man.
Absolutely, mate. I'm always down for that.
All right. People that need to follow you, where should they do it? Obviously, they're probably already following you on Twitter. What else do you guys have rolling? You guys have a video now that comes out 3 times a week, a newsletter as well. What's the YouTube name they should search?
Yeah, you nailed it on the head. So the YouTube name to search is Technical Roundup. Pretty straightforward. And it's also the link in my Twitter profile. And then there's a website, a newsletter under the same name, technicalroundup.com. It's free. It was previously kind of our paid, crazy, spooky paywall subscription thing. We got rid of that, and now you can just read it every single week. So yeah, from Twitter, Technical Roundup, and that should have you covered.
Beautiful. So if you're paying someone right now for trading tips, just go check this out. Ask that guy for your money back. I imagine you're going to be in a better spot. Cred, thanks a ton for coming on, brother. We'll talk soon.
Thanks for having me, man. Always a pleasure.
Yep. Peace. All right.